Okay, guys, so today I wanted to run through with you a rule which we covered yesterday with our pro traders, and it's really about the 5% markdown on a equity market or an index equity market out of hours. So the function of a market is there to facilitate trade. Okay, that's what the pure function of a market is there for, to match up buyers and sellers. So when there is an area in the market where no trade has been facilitated, the market is out of balance to some degree. It's a bit like a boat. A boat will rock to the left, it will rock to the right, but it will eventually come back into balance. And that's pretty much the same as what the markets do as well. Now, yesterday we saw a large move out of hours on the markets. It was like a mini crash, and you will get that once or twice a year. And I've been trading this particular strategy for a number of years. I did it when Donald Trump was elected. I did it during the Japanese earthquake, Brexit. You know, there's a whole list of scenarios where the market had fallen by 5% overnight. So what I'm looking for, and it's something you can look for in the future, is that when the market is substantially marked down overnight, then you can look for a buying opportunity on that market. Now, it could be as simple as, if you're marked down 5%, you should really, it probably should correct probably at least 3%, if not the whole 5%. So on that premise, you could go in with one-to-one risk reward. So, if your target is 300 points, you could have a 300-point stop as well, out of hours. But again, the further the market does go out of hours, the more imbalanced it's going to be anyway. So even if you're taking some heat on this at the open, it is likely to retrace to some degree, at least a 50% retrace, because the market is so imbalanced. So what we're saying here is, if the market, it doesn't matter what the news is, if it's the drawdown of 5% out of hours, then that is a buying opportunity. You will get institutional funds come in and take advantage of that market price inefficiency, and it's certainly worth participating in that one. Now, of course, when the markets are crashing to that degree, there will of course be a lot of negative publicity. Bloomberg, CNN, that it's all going to be blood on the floor. But actually, when there's blood on the floor and everyone's very fearful, that can be the best time to get in. Obviously, the opposite applies to when everything's very bullish, everything looks fantastic. I'll take Bitcoin as an example. Then that's not the time to be investing. And if you've been watching Bitcoin, you would have seen that there was emails going out left, right, and center about buy Bitcoin. Cryptocurrencies are the best thing since sliced bread. You're going to make so much money. And once everyone's talking about it, it gets too bullish. That's not the time to be getting in. Really, the best time to invest is when things look terrible. That's when there is opportunity to make money. So how do we take advantage of this? Well, out of hours, I always look to start. As a rule, I'll always start to buy the FTSE. The FTSE is my bread and butter trade. I specialize on that particular index, known as Mr. FTSE in the UK. Because that is my speciality. So certainly if the FTSE is down 5% overnight, I'm going to buy it overnight or the next day for sure. Now, one key rule with this is do not buy the markets, however, if they're marked down 5% on an actual trading day, because then there's no imbalance. So what I mean there is that if the market, say for example, opened today at 8 o'clock, something really bad came out and the market sold off 5% or more, that's not an opportunity, because there has been trade that has been facilitated in the market. But out of hours, we're saying if there is this huge move, which we can see on the charts here, yesterday there was this huge move that happened out of hours, and no trade was facilitated between the close. I think it was 73.30 where it closed on Monday, and then of course it crashed down overnight. This move down here got over 5%, and that was an actual, that was a buying opportunity. So I was buying this move down here, and my target was actually 7,300, which was actually hit overnight on this particular trade. Now, if you cannot, if your account doesn't allow you to take advantage of such a large stop on this, because ideally you're not really having a stop on this when you're getting in 5% or lower out of hours, because even if it goes lower, actually that becomes a better opportunity. But if you do need a hard stop, then if you're looking for a 4 or 5% move, then you could have a stop equal to a 5% move lower from where you're getting in. Pretty unlikely you're going to see a 10% move out of hours. It could happen, but unlikely. Now, that's obviously you need a larger margin for that. If you don't want to get involved with sort of that out of hours, then even if the market is open substantially lower, you can look to get in on an opening 5-minute bar, or you can look to get in at 7 o'clock as well. 7 o'clock is also a possibility. So a 5-minute bar break up at 7 is a possibility to start getting involved, because that's generally when things start really participating on the FTSE, is from 7 o'clock in the morning onwards, even though futures do open at 1 o'clock in the morning. Or you can look for a 5-minute bar break up. We actually have a number of whale trades which participate in extreme market inefficiencies as well. And yesterday we had numerous whale trades that came in for some fantastic returns, and I'll show you what people were making on that shortly. But the message really here is that when markets are drawn down by 5% or more overnight, it's a buying opportunity regardless of the news, but it has to be out of hours, not during cash hours. And as I said, if you don't want to be getting in with such a big stop, you could wait till 7 o'clock in the morning. 5-minute bar breakup's good enough to get in, or you could look at a 5-minute bar break at 8, or you look at the whale program. Now, the whale program, of course, have very structured and systemized trades which get you into classic market inefficiencies. The whale program is up over 70% since we joined it since we launched it in June last year, and will be well over 100% most likely since it's been running for a year. Now, of course, the whale program is based on our own trading plan, which we've used for multiple years ourselves. However, we released the blueprint, so to speak, in June last year, and it's been performing incredibly well, which it should do. It's based on our own trading plan. Now, let's just have a look at some of the trades that people were getting out of these market inefficiencies. Okay, just looking in my private Skype room for our pro traders. Ken, he actually records some of these whale trades, 6% up. We had Kim here 4%, Miko 8%, Michael Caine 14%. So some really good profits being made there. And this is actually Lee here. Lee messaged Cameron yesterday as well. He made over £10,000 on one of the well trades yesterday, and he's saying well has changed my life, and he's indebted to us. So these sort of things, we are a massive success on the whale. If you're not involved, you should get involved because you're missing out. But certainly, the whale program is one way of taking advantage of extreme market efficiencies. But if not, you can look at other strategies. I mentioned a couple of basic ones there for you, and the time guides. But certainly that 5% rule is something that you can look at as a standalone trade going forward if you see a 5% markdown on the markets overnight.